Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hello, everyone. Welcome to a special episode of ET Markets Crypto TV. Today, we're going to be talking about India's crypto evolution, charting the path forward for regulation, adoption, and innovation. We have three founders joining us: Edul Patel of Mudrex, Sumit Gupta of CoinDCX, and Ashish Singhal of CoinSwitch. So, thank you, Ashish, Sumit, and Edul for joining to discuss this very important topic. So crypto has had a very tough 2 years in India. It started after the bull run with the taxation, and recently there was some respite when the finance ministry issued show cause notices to the 9 offshore crypto exchanges. But the bulk of money of retail investors still remains offshore. Despite this massive increase that all of you guys have seen in both deposits and sign-ups after the show cause notices were issued. So my first question is to you. Despite this mini boost that we saw, and you've allocated $1 million to facilitate shift of these retail investors' deposits to your exchange, why hasn't there been a larger movement of funds, and what do you think, what will it take for more retail investors to sort of be incentivized to move to Indian exchanges and adopt crypto?
Yeah, Apoorva, first of all, thanks for having me here. And to answer your question directly, right, why hasn't the funds moved back to Indian exchanges? I think they have in some capacity.
Right.
And, this shift is not going to happen in one go. It's a gradual shift, which people will realize as they prefer safety, convenience a lot more, transparency a lot more. And that shift is gradually seen. And I think it's going to happen over time. I think the larger question here is that, the regulatory clarity from the government, from the center around the whole industry, the high taxation, I think that continues to remain as a major bottleneck for retail investors to trade on Indian domestic platforms. And I think we are hopeful that it will get rectified soon. It will get corrected soon. But I think overall, the sentiment like last 2-3 years have been very tough. There has been failure of larger major exchanges, but Indian exchanges, right, including the ones on the panel here, have been very resilient, standing strong, and have continued to serve Indian customers. I think over time, trust is earned, and Indian exchanges have earned that trust. And over the coming years and coming months, as market starts sort of getting more active, we are hopeful that customers will trade more like they have been doing in 2021. I mean, it's not like it's happening now. I mean, in 2021, 2017, Indian exchanges continue to do a lot more volume. So that just clearly tells us the core problem is the high taxation. The core problem is not enough conducive environment for retail investors to trade on domestic exchanges. And when that gets solved, I'm hopeful that pretty much everyone will sort of come back and the activity will resume like how it was earlier.
Sumit, just one follow-up, before I move on to the other panelists. So, whenever I speak to people who believe in this whole idea of a decentralized world, of course, there seems to be a bigger purpose and a desire to accomplish a bigger purpose that's there. That is what attracts a lot of people to, this industry. But at the same time, financial incentives seem to be the driving force for trading. So, in some sense, and please correct me if I'm wrong, but do you think that purpose that people have, will we ever see that in the adoption of people buying crypto for that reason and not just financial incentives? Do you think that shift can or will happen, or will both coexist in some sense always?
Yeah, so Apoorva, I'd like to make one correction here. Like you mentioned, people come, like pretty much all the masses come for the larger purpose. I don't think that's true.
No,
You'll
at
always
least
see
the ones who really truly believe in it, I guess that's what.
and those people will either start up in the industry or do something or join a company, right? So there are always few people who sort of take the lead and start, who believe in the purpose, who believe in the larger purpose of owning things on the internet, and that's what essentially drives people to build businesses. I think when you come to the masses, you will always find a large chunk of people who are driven by financial incentives, and that's not unique to crypto. It happens everywhere, even in stock
Right.
markets. How many people
Yeah.
invest in stock market just because they know, they don't even know the MIS, right? I mean, the full P&L of the company at times. It's just that
Right.
so I think it's that everywhere, and financial incentives can be a good starting point. Like, for me to start using internet, games were a very good starting point. I started playing this Virtua Cop 3 and the different Road Rash when internet was new, and now 20 years fast forward, we are doing bunch of stuff, pretty much everything on internet. So I think it starts with maybe people investing their 1,000 rupees, 10,000 rupees on Bitcoin, and they start doing, oh, what is store of value, what is Bitcoin versus gold, and then the journey progresses, and over time people become believers. So it's a journey, and
Right.
people start with financial incentives, but the larger societal benefits, economic benefits are also there, which is what drives us as founders.
Right.
And that is something that is visible in various sectors, various domains, and I think over the next few years you will see more and more of it. And we still a big believer in the potential of digital assets. I think the larger challenge, like I mentioned, is around institutions doubling down on this technology, supporting startups, governments being open to it, entrepreneurs being more comfortable building in this space. And I think when that happens, you'll start seeing a self-perpetuating cycle, and then it just compounds and gives us exponential growth in terms of users.
Right. Ashish or Edul, do either of you want to add anything to those two questions?
Yeah, so I think on the believer part, the way at least I think of it now, Apoorva, it's that all of this follows the similar patterns, right? Like there are 1% doers, 10-15% participants, and then the rest of the 80% are just consumers who will just consume it and become better. This is the same model that works even, let's say, for the internet, right? Like there are barely 1% people who actually are building businesses on the internet, but the rest of the 99% people are just consumers of the benefits that get generated, which I think is the same here. Like, even if you look at and actually on the contrary, on the other side, on the believers and builders side, crypto is actually far more, I think, entrenched. Like if you look at the number of developers, the number of people doing transactions on blockchains, the number of people who are actually participating in creating communities, building and growing those communities, and not only in India but world over, and doing this collaboratively world over. I think that number clearly is growing every single day. In fact, prices might go up and go down, and as a result, traders who want to trade in crypto will go up and go down. But the people who believe in it and are building on it, once it goes up, it never goes down. It just stays. It stays, it continues to grow, the belief improves, and then people come more. Right?
Right.
That cycle continues. So that's the only bit that I wanted to add.
Ashish, what do you think? Do you think this believer pool can increase?
So I think a bit differently, Apoorva. Proof is right that there could be only 1% builders and rest are consumers. But consumers has to attach to that technology or that product which is out there. First, they will probably buy or experience that product. They will see the potential of it, and then they will invest for the financial gains as well, right? So it's a long-term cycle, right? Like you see in the stock market, you would probably experience a product of a company. You will see, oh, that company is doing well. Everyone is probably using that product, and that company keeps on growing. So not just as a user, you would want to own a piece of that growth as well, and you end up investing in that ecosystem itself, right?
Right.
In crypto, it started the other way. It started with a lot of investments, a lot of retail users believing that this would end up creating those use cases, which will become the household, services, household products. But technology hasn't caught up to that point yet, right? So for mass adoption, to see that crypto is as important as we say they are, we obviously are on the other side. We will always say crypto is the most important thing because ultimately that's what we are betting our lives on, we are running our companies on. But if you look from a retail perspective, it will become important at a point where he's able to experience this technology, not just financially, but also how it improves his daily life, right? We
Right.
are still far away from it. You can take an example of a personal computer, right? When personal computer came in 1970s, everyone was not that, oh, this technology is going to change everything altogether. It took us, probably 20, 30 years, building of internet and all those progressions to get to a point where it impacts our lives today. We are enamored by the likes of Google, Amazon, Apple, Microsoft, because not just we use their product, but we invest in their product as well, right? So I feel that is yet to come, and that's where the industry is heading towards. These believers will build these products which will be mass market across, and users would not just see a financial incentive, but also see an actual improvement in their lives through these products. And that is a bit further away from where we are, and I would say that would be the point where the mass adoption would start to happen.
Yeah, Apoorva, I can actually give you a couple of examples where, this is actually in place live as we speak, right?
Yeah.
There is this product called as Fire Drops that was launched by Flipkart. Fire Drops is a rewards program where, coupons are converted to digital tokens and can be bought and sold and are stored over the blockchain. It's a very unique implementation of how rewards can work on the internet in a very transparent and composable way. And that's a very real live use case that millions of users are using, right? Other example, although not in the real sense of decentralized networks, but still uses blockchain technology, is this our entire setup of DigiYatra, right? Millions of people are using DigiYatra. DigiYatra is partially running on a blockchain network where privacy and information is moved across only in a permissioned, accessible way, right? So that's another example where it's being used. It's slowly and steadily coming into picture without the user even knowing, and that's where we will head to, right? Like that's the true adoption, and it'll get there.
Got it.
Just one more perspective, just one nuance here. I think to answer your question on the financial part, historically and over the last 5-6 years, the cost of transactions on blockchain was very high. In the order of dollars, $1 to $10, even sometimes goes up to $50 in case of network congestion. And when transaction costs are so high, it only makes sense when you do financial transactions. There you have the capacity to absorb that much cost. For normal use cases like social network, you can't afford to pay $20 every time you transact on the blockchain.
Right.
But I think that shift is right now we are at the verge of that shift, because technologies like rollups are going to make the transaction cost almost as close to zero and imperceptible to users. And when that happens, people will then technology will then enable them to build all those applications where the cost of transaction is not becoming a hindrance. And I think over the next a couple, 2, 3, 4 years, you will see people at least experimenting with building non-financial applications. Then people will build hundreds of them, few will pick up, and one of them will become like the Amazon or Google. I think we are yet to see that phase, but it will happen over time. But at least the technology is now ready to support those applications.
Got it. So basically, until we see more real life use cases, wide scale adoption may take a little more time. I guess that's what all of you are trying to say. But it'll tell me one thing. Bitcoin has sort of and is the benchmark crypto when it comes to the whole industry. And there's been a huge amount of volatility in it in the last 2.5 years. What is your thought when it comes to someone like a retail investor planning their investment strategy? How can they sort of mitigate this crypto volatility to ensure a more stable return? How can platforms create a more stable environment for investors?
Okay. So let's first break that part a bit down. I would assume that you're liberally using volatility for risk, because there are many other things apart from just the
I guess I mean fluctuations in the prices. That's what I specifically mean.
Okay. So see, there is very limited that you and I or any other platform can do for solving for volatility.
Right.
Volatility is a function of liquidity that's available in the market, which is also in some format a representation of at what rate is it being adopted. That's one part. And to give you some info, just the volatility of BTC over the last 5 years has gone down from 68% to 43.5%. And at this point, BTC has comparable volatility with the stock of Tesla. So, ऐसा नहीं है कि कुछ बहुत ज़्यादा volatile है. That's one part. The second part is that you need to think of it from this perspective: volatility equals risk. but just looking at risk on one end without looking at reward on the other does not make sense. So if you compare a better metric, let's say something like a Sharpe ratio, which is a more better example of risk reward, then you will see that actually the risk reward of Bitcoin and the risk reward of, let's say, something like a Nifty is very similar. Like, just to give you an example, vol of BTC, volatility of BTC was like 43% last 1 year. Of Nifty, it was 10.5%. But returns of BTC or Sharpe ratio of BTC is comparable to Nifty. So from a risk reward wise, BTC and Nifty are very similar. So with this context in mind, when someone wants to invest, what people want to do is they want to allocate different amounts of money into different risk buckets. Because what they want, or the reality is, how can they leverage this volatility is by making a larger portfolio, allocating some amount to BTC, some amount to equities, some amount to real estate, some amount to FDs, and so on and so forth, so that overall they are able to make money. And net, they don't get affected a lot if one of these volatile things moves out a lot, right? And this is the exact argument that is also being given by wealth managers to institutions. Like, the reason why there was this large push to get ETFs out in the US was that wealth managers have been pitching Bitcoin to institutions. Institutions understand that they want to make 2 to 3 to 5% of their overall portfolio into Bitcoin because it's volatile. They don't want to add more, but they do want to add 2 to 3 to 5% because it also gives them the returns, right? Having said that, it was difficult to incorporate that as a part of their portfolio just natively. So now with ETFs, it becomes much easier. How it becomes easier is a topic for a completely different podcast. We won't go there, but it just makes it easier for people to come into crypto. So as more and more people come in, volatility goes down for Bitcoin. We've seen this in the past. With the volatility, which is the risk, the reward for BTC is also high. So you should never look at it in isolation. You should look at it as a portfolio. And typically, to mitigate, unnecessary risk of loss, you should allocate, let's say, between 3 to 5 to 7% into either one token or a basket of tokens as an investment.
Got it. Ashish, what about educating beginners and financial literacy efforts that you guys or others are making to protect beginners? Because obviously that's always a concern of the regulator. And most of these investors are obviously very young, under 25-year-olds. They're not as financially savvy. They're probably making their first investment. So could you talk a little bit about what are you guys doing to sort of protect beginners from crypto?
Absolutely. So, Apoorva, that's a very, very important question because a lot of these young users who are getting into crypto, because obviously it has a high risk, investment, but also high promise of high return because of the technology change that it is bringing to what we do today, right? So, investment, obviously breaking that down across asset classes is definitely important, but how do we protect people, or how do we educate them that not just chase after high returns, but also understand the underlying risk? And it's not just Bitcoin, it's hundreds of assets which they are getting exposed to. Bitcoin is probably just the entry gateway into the ecosystem, and then they realize that, oh, there are some amazing companies solving amazing user problem, and they try to invest, and their volatility might be a bit higher or lower depending on what that asset is, right? So creating the right education for our users, helping them understand what this technology is about, helping them through the app, through the campaigns that we run, ability to tell them why this technology is important, why there are so many cryptos out there, why isn't Bitcoin the only crypto, right? And how different technologies serve different purposes, and also help them realize how the value is derived in a crypto. Today, a lot of argument that you see is the market is just news driven. If a news comes, there would be high volatility. So as a user, how do I make an informed decision if it is just news driven, right? Which we say is not the case. The amount of development happening on the chain is available to everyone to see, right? How do we know what are the new products coming into from those blockchains, new innovations? Like Sumit talked about transaction fee getting lowered, right? Those are amazing, parameters we can look at, the scale these blockchains are achieving, which would tell us what could be the future. And that's where users can make an informed decision, right? While this is from the user standpoint, I feel that there is another part which we mostly not bring in our conversation, which is how about other institutions like even law enforcement, even taxation, how different segments of government be informed about or educated about what this technology is and how it is impacting them, right? You would see a lot of because India is moving digitally very, very fast, you would see a lot of frauds happening in the ecosystem, not just in crypto, but across the digital ecosystems, right? So how can we help, say even the police, the entire taxation and everyone informed on what is happening. So CoinSwitch has run No Fraud Squad as a campaign where we educated and our users, where we educated 1,000 plus police officers, tax department employees into how to tackle these frauds and these help the users to get better at it, right? Understand the value of crypto, understand these products, and also understand what is happening in the industry and stay away from these greed-based traps that they may fall into, right? So this is what we do as a company.
Right. And Sumit, I think all of you guys also have a very strong, mechanism on how which coins are ultimately or which cryptos are ultimately listed on your exchanges. Can you talk a little bit about that? Because a lot of times there are these new projects that come up and are listed on, different kind of exchanges. Their prices go up and then they, go down, like typical pump and dump schemes. Could you talk about that framework that you're adopting, and how can users sort of be more careful about not investing in these projects?
Sure, absolutely. I think very important question, Apoorva. And just to pick up on this framework, so there are 10,000 plus tokens or assets out there, which can be traded or people can buy, trade in them using DEXs, right? So there is very high number, and I won't shy away from saying that probably 80% of them will not survive even 5-10 years down the line, right? Like just like what happened with websites, right? So many websites came, but very few survived tough markets. And as an exchange, as a platform, it's our responsibility, our duty to make sure that any of those pump and dumps or scam tokens or tokens that are there just to loot innocent customers' money do not get exposed to our customer base. And for that, we have devised something called as a 7M framework, which we have launched around 3 years back. And 7M framework basically essentially measures every token across 7 different parameters, like what is the market cap. Now, market cap is something which is very interesting. It just is one simple filter to just like in stock, wo blue chip stocks hota hai na, ki itte se upar hoga tabhi aap public kar sakte ho. Similarly here, we don't want any small token which is just worth $100,000 or $1 million market cap to come and list on the platform. So that is one factor which eliminates a lot of that noise. Then motivation. What is the motivation for the founders to come up with this token? Are the tokenomics even real? Is it even decentralized, or the most of the tokens are held with few centralized addresses? What is the momentum in that token, right? So there are various parameters that goes that every token goes through, and if it crosses that threshold of 7M, then only it gets listed on the platform. Though customers, we don't know which platform will work, which token will work, which will not. At least what we can do, at least have some standard framework which looks everything from the same lens. And that is, I think, which is very important for customer protection, because our job as a platform is to make sure that customers are comfortable with the overall asset class, with the overall industry, and also comfortable with their investments. Because if customers end up losing capital, it's also something that harms the platforms, right? At the very fundamental level. So that's something that we do. Over and top of that, there are various initiatives that we are running in parallel across all the things that Ashish mentioned about. For example, DCX Learn is an initiative that we launched around 4 or 5 years back, where anyone free of cost can come to the platform, start learning about crypto, start learning about blockchain, smart contracts kya hota hai. Jab tak wo nahi pata chalega, how can they value Ethereum, right? So around academy, around education, that continues to remain as a focus area. I think a lot of that education also happens on ground. I remember Edul and I were having like long chats around 6-7 years back in our flat, and we used to discuss about various topics. And that is basically what got us triggered to join and start something in this space. There are a lot of those builders who are on the ground, who are looking for not just online content, but someone who they can talk to and can be friends with and exchange ideas. So we believe that on-ground activities continues to play a very significant role even in a hyper-connected digital world. So there also we do various initiatives around Namaste Web3, around Unfold, where entrepreneurs, builders, curious people come together and learn from each other. I think that is what builds the ecosystem in the right way, and educating and making customers aware about what are the risks as well as the technology's potential. I think both has to be sort of discussed, and very open discussion without any biases. I think that just makes the thought process a lot more cleaner, and customers then come with a lot more conviction and confidence into the industry.
Absolutely.
Like you would have, I'm not sure if you would have heard or not, but I'm pretty sure Sumit and Ashish would have heard this term DYOR, do your own research.
Yeah.
Is what is the standard that's given to every user. DYOR karo, do your own research and then only buy and sell, right? But what's difficult is how do I do my own research? Like where do I take things from? So I think from an education lens, just making sure that everything is easily available, accessible, summarize so that people can make their investing decisions easily becomes really useful. So got this feature called as Mudrex Insights, and we've got a RM system where relationship managers exist to help people out. And Mudrex Insights gives you these very quick summaries. Okay, what are the fundamental analysis of this particular token across 6-7 different parameters? What are technicals looking like? What is the sentiment like? And then if you want to talk to someone to understand how all of this works before you want to invest, then okay, here is this person who is an expert. You can have a chat with them, get some understanding, and do all of this free of cost, right? So I think at our end, we focus a bit more on how do you help people do their own research much better, and that is something that is, I think, available to users freely.
Right. Absolutely. There's definitely a lot of good resources out there. But in terms of businesses, Edul, you mentioned Flipkart, right? In India, payments as a use case obviously cannot really take off. There were a bit of some, individual players doing it during the bull run, but because of taxation and the government stance, that really couldn't take off. But in terms of businesses and institutions adopting crypto, I mean, are you seeing that, besides Flipkart at all happening? And what are some of the clear use cases that have emerged in India?
So I think this is a great question, right? So a business will only adopt the technology if it adds some inherent efficiency to that system or helps them scale better, right? At the end of the day, dhanda banna chahiye. There needs to make some economic sense, right? The reason why payments as a use case will not happen in India is because we've got the world's best payment system in-house with UPI, right? If you have UPI, you do not need anything else to solve for payments. Like it is so good that multiple countries across the world are now adopting UPI, right? So I don't think payments is a use case that will get that is an important use case to solve, because it's not a problem. It was a problem a few years ago, but UPI came in and solved it. So it's a solved problem. There's no point in building and solving for that. Having said that, there are many other financial services or economic value transfer problems that are problems that will get solved. And like the Firedrops example is a good example in a sense, because Firedrops uses blockchain to help people transfer rewards from one person to another, right? It's like a digital credit coins or loyalty point system, which might be a better way in which that problem gets solved. And maybe blockchain is a better use case for that, right? Very separate example is show off status and luxury. So Nike over the last year generated close to $200 million worth of sales selling digital collectibles for metaverse entities, right? So shoes that your avatars can use, which are a show of status and symbol. And that's a very different problem that can get solved, right? Similarly, there are many other problems that can get solved, and it will just take time. The unique thing about crypto is that, or about blockchain, is that a lot of these problems are global. And with India, we are at this place where we've got one of the largest English-speaking development friendly economy, right? Where we've got tons of young people. A lot of them are English speaking. A lot of them are dev friendly. A lot of them understand marketing. A lot of them understand a lot of other services, and then can work with global peers to distribute products that are being globally to global people. And I think that's where a very large opportunity exists for businesses in India, building businesses from India for the world, not only for India. And that's I think the real opportunity that we should be focused on.
Ashish, have you seen keenness in your conversation with people to, I don't know, leverage this technology or crypto into their business? And what are really their questions or concerns that stops them from doing so?
I think so. First, let's look at what blockchain or crypto technology can add to any business, right?
Yeah.
And then look at who are the people who would
Yeah.
be the most beneficial and what are the questions coming from them today, right? Uh, Crypto or blockchain can provide a trustless system. What it means is, say, if you go to a bank today and ask for a loan,
Yeah.
based on how well your bank manager knows you,
Yeah.
you will get different, set of parameters on which you will ultimately end up getting a loan, right? Now think of a trustless system where it does not matter who the person is who is going to the bank, but based on certain data points, it will always give you the correct result. It does not matter how your relationship is with the manager or how wealthy you are or how known you are. All these parameters will not matter, and it will create a technology which is equal for all, right? And wherever we see that equality is not being passed on, this technology can be very, very useful
Okay.
for that. So any business who in its current business model wants to bring clarity and openness to its users, that's what can benefit. Or we can build substitute systems where instead of one person owning and deciding the fate of how a service goes on, a
Yeah.
community based system can be built in where the decisions of that product are taken by the community, and the incentives are given to the community itself to grow that use case rather than a single corporation itself, right? So these are the two big use case. Definitely financial use case are lie in this ecosystem of being trust, right? Whenever user is transacting, whenever users are paying to someone, trust matters a lot. Today he's trusting banks or intermediaries to figure out whether he can trust that ecosystem and can make that payment happen. Crypto is not just about making a value transfer from one person to another, but it also how the backend systems can work and create that trustless ecosystem where users does not have to worry about if their money can be defrauded, if their money will be taken away by someone and misused, right?
Right.
So I'll give you a very simple example, and we have had multiple discussion even with higher ups at RBI on this, on how this technology can really help scale up the financial ecosystem of the country, where today if your UPI although UPI is amazing and we all live by it every day, but if your UPI transaction fails today, it
Yeah.
takes about 7 days to get your money back. If the technology is real time, why does it take 7 days to get your money back? Because two banks at the back end are reconciling their orders and figuring out that, oh, this transaction has failed, passing files between each other, and then coming up with a conclusion, oh, this needs to be refunded, and that's how you end up getting a refund, right?
Yeah.
Building that on a blockchain in a trustless systems where two banks don't need to trust each other but trust the data on the
Yeah.
blockchain and can make this operation real time,
Hmm.
can really significantly help advancing even the financial ecosystem. Even the UPI that we use today, which is amazing,
Yeah.
can take it to the next level itself. Today
Hmm.
the major concerns, which is the other part of your questions, that we hear from these businesses who are yet to implement these ecosystems are scale,
Yeah.
are about transaction fees,
Yeah.
are about expertise in these areas to be build such reliable systems at scale,
Yeah.
right? Which, like Adul also mentioned, with a great developer community in India, with products that are can be built for the world. And UPI is a great example, which is built for the world. It has proven in India, but it is ready for the world to take over. So those are the products that we can build and are building today, but hasn't seen that kind of progress, that hasn't seen yet that large scale, because the
True.
underlying technology itself is evolving.
Correct.
With say ZK rollups, with side chains, these scaling problems are getting solved as we speak, right? So we will get to a point where these businesses would be more than happy to use these technologies once this technology is able to support these use case at the scale that we think it should.
Got it. Sumit, do you want to add anything to the whole
Yeah,
point
I
of
think
businesses adopting crypto?
Yeah, I think Edul and Ashish pretty much covered it. Just one point. I think
Yeah.
crypto, for example, like internet solved the problem of transfer of information from any point to any other point in the like across the planet.
Yeah.
Crypto solves for transfer of value, and
Yeah.
payments is one subset of that. Right? Transfer of value does just not mean that okay, paying from one person to another. I think payment is just one part of that, and this payment is actually a it has been a problem and it's getting solved outside India. Like in India has UPI, so the delta is not that much, but globally people are building products on chain. Like for example, Neobank on chain, where all of these use cases that Ashish mentioned about, can be incorporated. So that's happening. Two of the biggest giants, Visa and Mastercard, right, generating over $200 billion plus in revenues, which is essentially ultimately comes down to us. Like we are paying for that, right, indirectly. What is the innovation happened over the last 30-40 years? I doubt. I mean, it's just a network that has been built, and that network generates $200+ billion in revenues. That problem can be solved. Why do we need to pay 2% every time you make a payment? Right? It can be done like almost at free of cost. And crypto and blockchain technology empowers that. So there are people who are building very interesting business models outside, because I think for payments to work, you need support from regulations. The central bank should be more comfortable with that. I think India is currently sort of evaluating the stance. Like payment is something which is very touchy also at times, and you sort of the innovation sort of that people are thinking of in India is less. But outside, when I talk to founders, I think people are building all sorts of problem. Remittance, $120 billion of inward remittance comes to India. You can solve it. Like why to pay additional $1 billion in fees, because there are thousands and lakhs of people who are doing and approving the transactions manually when it can be done on a decentralized ledger. So payments, just one vertical, can itself unlock hundreds of billions of dollars in value, let alone like there are n number of other verticals that you can do, including lending, borrowing, so yes, I think the scope is there, and globally we see, because it's a global asset class, we see people building solutions on top of it. India will sort of maybe do that over the coming years.
Ashish, what do the higher ups say when you give them the recommendation that you take?
Very important question for Apoorva.
Sorry, can you repeat the question? What does the higher up say when?
When you recommend them solutions, about, for example, UPI, it takes 7 days to settle. So what do they have to say when you recommend these
They're
solutions?
receptive and they understand it. And to be honest, they know equally or better than what we know about this technology. So when they are coming up with the rules, regulations, they're not coming up by not knowing about this technology. RBI Innovation Hub is probably, at the forefront of using these technologies and figuring out what would work and what would not work, right? So they are already very, very informative about what is happening. I think one of the key questions that I particularly has faced in these meetings and have suggested is about scale. Because RBI has to support, the financial ecosystem of billion plus people, right? So how do you create infrastructures which are reliable, are transparent, but the most important part are scalable to the level where, how we have seen the adoption of the internet, of the UPI, the payment, digital payments and all, right? So I think that's where the conversations are. There are a lot of pilots which you would see in the future that different government would do, that different organizations would do, and that those pilots are about testing this technology, testing the efficiency that they are bringing into the ecosystem, and hopefully we are able to scale those up with the solution while coming together as a Web3 ecosystem and help solve those use cases for the future. But the feedback is quite positive. Feedback is negative, obviously. What are the flaws of these ecosystems? And we understand the flaws as well. We are not saying this ecosystem is perfect. It is still building. Like the internet wasn't perfect in 90s, right? Like the computers weren't perfect in the 70s and 80s. This technology is also not perfect, but it is improving at a drastic rate. And Indians have a big role to play and in owning the development, owning the future of this technology. And that's what we try to convey to the higher ups.
Yeah. So, but recently at the World Economic Forum, the governor made the statement again that, blockchain, of course, is useful, but cryptos are a threat to financial stability. And that stance has really not changed in the last 10 years. What has changed is, of course, the recommendation of imprisonment and all that has, of course, gone down, completely gone now. But, as businesses that are operating in the environment that is there currently, um, on one hand, you have, the G20 framework, which said that there will be no blanket ban on cryptocurrencies. But then you always have, these quarterly statements from the RBI. What I'm trying to understand is, how do you plan to survive and sustain in this confusing environment?
So we do it one quarter at a time, I think.
Sorry, that was just like, it feels like that.
So,
Anyone wants to.
yeah, so I think I can take it up. See, firstly, what you need to understand is that the job of the regulator is extremely hard. Like
Of course,
everyone
yes.
says regulator ये नहीं कर रहा है, वो नहीं कर रहा है, but like their job is extremely hard. You need to understand that crypto is not an asset, it's not a security, it's
Yeah.
not a currency, it's not a commodity. Yet somehow it is all of these things together as well. Somehow. And that's the weird conundrum. And as a result, it is fair for the regulator to be cautious. Because
Yeah.
for them, what is important is that there needs to be financial stability, there should be less frauds, and
Yeah.
this technology can be used for good more than worse, right? And that's true for every single technology. Everything can be used for good as well as for bad. What the regulator's job is to ensure that the bad actions can be cordoned off and the good actions can be promoted. And all of this takes time. And the stance of the regulator, in my opinion, has gone from कि यार इसके बारे में सोचना ही नहीं है to this, that okay, this is something that's interesting and important. How do we understand it, appreciate it better, and then bring it to action? And I think that's the change that's happening. And this change, in my opinion, has been consistent since the last few years. So in my head, ever since the RBI ban was overturned from the Supreme Court, we've only seen more and more and more promising actions that have happened in the country towards the direction of creating an ecosystem where the good usages can be promoted and the poor usages can either be restricted, limited, or cordoned off to an area where fraud does not happen, where economic stability is not hampered, where the larger other ecosystems and other systemic risks don't get impacted. And that's, I think, is the stance of the regulator. And I think that they're doing a good job. You need to understand that these changes take much more longer, right? Like technology does not move at the rate at which regulators move. Technology moves much ahead. And regulations are always playing catch up because that's their job. They have to play catch up so that they can understand what is working, what is not, and then take actions on the part that are bad. So that's my thought on that front, Apurva.
Sumit and Ashish, do you want to add anything?
So I think one point to add, when you look from an RBI specific stance, right? And I'm assuming your question was more on that direction itself, right? Because if you look at the government stance, that has after the G20 has been about regulation. It's never been about ban. It's about
Correct.
how do we understand this technology and build it right.
Absolutely.
And that has been a consistent, and that's actually has been very helpful for this industry to interact, to give suggestions and to see, and you can see the impact as well, right? Certain guidelines for KYC, SK guidelines for advertisements. Now virtual asset digital providers are coming under PMLA. So all those things are positive in the right direction. But from the currency lens, this still looked upon, and which is rightly so, right?
Right.
Crypto started as a currency, use case, but in India that should not exist, right? It is a technology play. And I think those comments are regarding the use of crypto as a currency and not as a technology overall, right?
Yeah.
So we also support the same, right? That crypto is not probably right for India as a currency. CBDCs are probably placed correctly to solve that use case for the user, to provide a digital currency which can go even a step beyond UPI one day as well, if goes right. And crypto as are more like crypto assets, which are building the new use cases for the generation out there, businesses to develop on it, and then retail users could use those technologies or invest in those technologies. So they are more like securities rather than a currency itself, right? So to answer your question, as it has, to be honest, become easier for companies like us to hire, to grow, in the environment, because it has become much positive. Earlier, you would see only news about
Yeah,
bans
right.
or not ban, right? Today, you see news about how do we grow this? How do we learn this? How do companies support in getting this to the next level? How does India not lose this momentum, or how does India become the leader in this ecosystem, right? So I think those are the positives which our companies are definitely positively impacted by from the time that G20 has happened.
Great. Sumit, can you share your thoughts on building in this environment, which may be, harder to grow in, but of course it's become better over the years?
Yeah, I mean, I think it's just about a very strong conviction that you have in the larger technology itself. And when you have that, all of these fluctuations, sort of, you build up that appetite to absorb all of these shocks which comes, and it's
Yeah.
not new. All of us here have been, absorbing those shocks over last several years. And when you are in a disruptive industry like this, these are bound to happen, right? New technologies, of course, not all the answers are there. There are misconceptions, there are confusions at times. Sometimes things evolve over time. And what's very interesting for me as a founder is that in this industry, you're not just building a product, or you're not just building a business. You are contributing to building an ecosystem where आपको प्रोडक्ट भी अच्छा बनाना है, आपको टैलेंट भी अच्छा हायर करना है, because there is not enough talent in the country. Then you have to solve for regulations as well. You have to solve for education. You have to solve for category growth. You have to do stakeholder consultations, meet government officials, stakeholders whenever required. Make sure that you yourself are motivated deep inside, and you are able to motivate the team. Otherwise, half of them will leave, right? And not knowing when regulations will come, all of that. Honestly, it's tough. It's tough, but we all genuinely believe in the potential of digital asset, and that is what keeps us going. And yeah, I mean, like the way we solve that is by thinking long term, right? And that's one of the pillars in our ways of working. Like whenever we are doing something, we don't think about 3 months में क्या होगा, एक साल में क्या होगा, because 3 साल पहले अगर सोचा होता अरे वो 10 years का जेल होगा, तो आज we would not be even there
Yeah,
here, right?
definitely.
So, but that time we had taken a long-term view that India will regulate it, and I can say it even now that India will come up with regulations, right? It may take 1 year, it may take 3 years, 5 years, I don't know, but regulations will come. That is the belief, that is the hope and conviction, and we are building for that. Things will get difficult, things will get challenging in the journey, but it's okay. We are not solving a very simple problem. If the problem would have been simple, there would be maybe 5-10 founders instead of 3 on the call today. So yeah, I mean, like just thinking long term solves a lot of things for us and for the team, and it's ingrained in our culture.
Great.
Yeah, Apoorva, there is
Yeah.
this book that is being written by Chris Dixon, who is a VC
Yeah.
at E16Z, called as
Yeah.
Read, Write, Own. ठीक है, उस book में he's writing that book specifically to educate people about why crypto is important. And there was this, I was reading a preface for that book, and the thing that struck to me and is been a part of my core belief since a very long time, and he wrote it very well, is that see, over the last 20 years, somehow the internet developed to become unfair and biased towards large monopolistic companies.
Yeah.
Protocol networks and blockchains are the only way the internet can become fairer. And my belief is that the reason why all of this will get adopted is just because it makes things more efficient and more fairer. And if there is any technology that makes things more efficient and more fairer, it will get adopted. It's just an eventuality. It's an economic eventuality. It just takes time. And that's the perseverance and the motivation that keeps on driving you, right? And that's the part that's important. That's what you need.
Just one correction, Apoorva, you mentioned about the point. I think we are of the opinion, and anyone who is in the industry will understand how tokens are critical to public blockchain networks, right? Because if you don't have tokens, if you don't have crypto, public blockchains, there will not be any incentive for network participants to run public blockchains. So the perception that, okay, blockchain technology is good, but crypto is useless, it doesn't have any merit, at least in my opinion, is wrong.
Yeah.
Both
No,
go
but I guess
hand in hand.
the government has created private blockchains, I guess, and they're using the technology, the blockchain technology, in other ways.
Yeah, I mean, like, but
No, but I know what you're saying. There is that
Yeah.
argument always that,
और एक लंबा podcast हो जाएगा सुमित, just on this topic.
okay.
Yeah, let's do
Maybe
that.
for next time.
Yeah. Thank you
Ashish, you
so
were
much. Yeah, Ashish,
So
any
I was just
final
saying that
thoughts?
that is just one way to solve that problem by building private blockchains. But I think what we are talking about are public use cases. Like how do you remove single point failures? How do you build trustless systems? How do you create more fairer ecosystem? For that, private blockchains aren't the solutions. Private blockchains are solutions for something else, which obviously people are using in the right way. But public blockchains are the way to solve for the larger use cases. So I usually take an example of a pen and a paper, right? So if blockchain is a notebook, then you need a pen to write the rules on it, right? Without that pen, you cannot create value out of that paper, right? So that's where the value of crypto lies in. And like everyone said, that it'll take probably but I'll end here. Yeah.
No, thank you so much. I think this was really insightful, and I hope whoever watches it takes back a lot from it. Edul, Sumit, Ashish, always a pleasure. Thank you so much for your time, and yeah, hope to talk soon.
Thank you.
Thanks a lot for having us,
Yes.
Apoorva.
Thank you so much, Apoorva. Thank you, everyone.
See you guys.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.